Yo, and welcome back to the channel. So here we are in Madagascar, in Nosy Be, currently at a hotel complex. Building a perfect stocks portfolio. It's been a challenge of my life so far to do this. It's not that easy to obtain the perfect stock portfolio, that's for certain, but you can get somewhere close, given a little bit of time and experience and learning. Obviously, the stock market is a lifetime learning game. It's not something that you can just pick up and get it right straight away. I've had losses, I've had wins, but overall I've won. So that's a good thing, and I'm doing all right. My stock portfolio is coming on nicely. I've just completely rebalanced my portfolio. I was heavily into SoFi Technology, which is a banking stock, online banking stock, which deals with student loans, refinancing. It's gone into crypto as well. It's mainly for the young Americans who have got a bit of wealth. They're the main target for the bank, I do believe. It's done very well lately. I've made a nice little profit off it. I bought it at $8 a share. It's resold it at about 14. I then bought back in at 15 and it dropped a little bit to around about 13. I held my position. It went back up to 16 and I sold out of most of it and held just around about 700 shares, but I was in it for like, I don't know, 60 or 70,000 euros. So now I'm at a reasonable position. I've diversified it across the board, across the stock market. So we'll have a look into my stocks in a minute, into what I've got. But first, I'd like to go through some notes that I've wrote out just to help me explain about the stock market, about what I think is the best way to go. So here we go. I believe the perfect portfolio is a third growth, a third value, and a third dividend stocks. So you've got an even balance. I like dividend growth myself. Ones that are growing companies that do have a small dividend that can grow over time. Now, you should never keep more stocks than you can keep an eye on. You want a minimum of 3 stocks and probably a maximum of around 30, 35 stocks, which is where I'm at. I'm probably a little bit heavy from where I should be. But I think at the moment, the stock market's hitting all-time highs again. It's nice to be diversified for certain. And obviously, always hold some cash. You should hold between 10 and 30% in cash, so that when the stocks dip, you can buy the dip at a reasonable discount. Obviously, if the stock market is high, then you should have about 30% cash. If the stock market's dropping and it's in a downward trend, then maybe you can buy more stocks and your cash portfolio is going to go down to 10% or something like that. You should see red as your friend. When the stocks are in the red each day and you can see them going down and going down, it's not a bad thing. It's an opportunity to buy more of the shares of your favourite companies at a discount. You should see red as a discount, not as something, oh my God, my stocks are going down, I'm going to sell. Most people sell when the stocks go down, and they buy when the stocks are going up. I think that you should buy stocks that are already up and going up more, and then sell them when they start dropping off from that high. You know, buy low, sell high is a nice option. When do you know if the bottom's in? Well, you don't. That's the problem. Stocks should be something which is a long-term hold. You want to hold the stocks for a long term, not for like, I don't believe in like buying stocks and holding them for like a day or for a week, because you're going to end up paying a lot of fees. And that's where over the years, you'll lose a massive amount of money in fees. So always best to buy to hold long, and then the fees don't add up so much, and all your money that's invested in the stock market can grow. It can compound over the years. The dividends can come rolling in. You can reinvest the dividends. That's the way to go. You need to learn from the best investors. I like certain investors. I'm not going to particularly go into all the names, but Peter Lynch, Warren Buffett is somebody else who I follow. There's quite a few. Roger, what's his name? Forget the guy's name at the moment. But he did, what was the book called? American Biker or something? Investment Biker? Forget what his name is, but yeah, I follow him. He's a guy who lives in Singapore. Some of his advice. Obviously, I haven't looked into him for quite a few years, otherwise I'd know his name. But yeah, you want to find the best investors in the world and follow what their advice is and go with that. You need to buy profitable companies, buy profitable stocks. Buying all these stocks that have never made a profit and everybody's FOMOing into them, the fear of missing out, so they're jumping into the stocks. It's always not the best idea to do, you know. You're best off finding companies that are making profit, they're doing well in life, they're going places. You can see they're going to go up long term, they're going to get stronger and stronger. That's the way to go. Buy stocks in industries that are growing, you know, rather than industries that are going down, like tobacco industry is going down, coal and stuff like that. It's going down, even though I do have one stock that is a coal mining company. So don't take all my advice. Just take it as a pinch of salt. Don't take too much notice of PE ratios. But you don't want companies with massively high PE ratios. Like Palantir, the PE ratio on that is massive. It's unbelievable. I made a lot of money out of Palantir. I did very well out of Palantir, but I sold it far too early. I should have held. But hindsight is a wonderful thing. Am I going to buy back in? Not at the moment. Not with the PE ratios the way they are. But like I say, don't take too much notice of PE ratios. Don't buy ones with very low PE ratios, like a PE ratio of 3 or 4 or something. They're on the verge of bankruptcy, you know, those companies. So be careful of that. You don't want to buy companies and just have hopium. Just hope. I hope they'll go up. I'm really hoping it's going to 10x this company in the next week. Be careful. Find companies with a good CEO and management team behind them. Is a must, in my opinion. Companies that have got a moat around them, so it's hard for other companies to break into that market because that company's got the moat, it's got all the business, and companies where you need them. You like say a software company, you buy their package for your company, and say you've got 1,000 computers in your company. It's hard to then change that company or that accounting company. So buying companies with a moat, where other companies are going to find it hard to steal their business from your company, that's the way to go for certain. I'm mainly heavy in the United States of America markets, the USA markets, over others, over the UK market or the European markets or the Tokyo Exchange. I stick to mainly the US markets. I do have some British stocks, not so many. Being a British citizen, it is an advantage to me in some ways to have the British stocks, but most of the American stocks, they just outperform the British stocks, so it's just pointless in a way, you know, apart from diversity. And the American companies are good for long-term growth and safety, in my opinion. But please take this video as entertainment. Don't just copy what I'm investing in. Don't sue me, bro. It's essential to do your own DD and research on stocks. Most people are probably best investing their money into the S&P 500 and just leaving it to grow. Add into it monthly and leave it to grow long term. Draw it out in 20 years and see what you've got. It's not easy to outperform the S&P, which is why I say most people are best investing in the S&P. The people who invest in single individual stocks, on the whole, most of them struggle to beat the S&P 500. The wiser ones who buy the investment and hold the investment for years and buy the right stocks, the right companies, the profitable companies, the good names with the good management teams, they're the ones who do outperform the S&P 500. Us guys, the retail investors, we're basically a small part of the market. Most of the market, probably 80% plus of the global markets, is owned by big institutions. People like BlackRock, Warren Buffett, big companies like Scottish Mortgage Trust, companies like that, pension companies, they're the companies that own most of the stocks. So, like I say, just invest regularly on paydays into your stock portfolio, and then you can spend the money on individual stocks. You can buy a combination of the S&P 500 and individual stocks, or even add some ETFs to the portfolio. Maybe even add a bit of gold bullion, or go into some Bitcoin stocks. Cryptos, before we move on to other stocks, and I'll show you my portfolio, cryptos, be careful of investing in cryptos. Your best plan, in my opinion, would be to just buy Bitcoin. If you're going to do anything with crypto, just buy Bitcoin. So there you go. I do have a couple of portfolios, and we'll have a look at them right now. I'm having a Red Label and Coke. Very, very nice to keep us going. Let's get this camera set up for the phone. I've got a second phone here. I know it's a bit 1970, but here we go. It's obviously, I don't edit videos, and I don't have a computer. I don't know how to edit videos. I've never learned. So this is what we're left with. But it basically gives you everything you need to know here. So I've got in my SIP, my self-investment pension plan, which I invest in myself, I've got £17,130 inside it, and cash of £600. Each month I pay in £300 into this, and I'm just going to grow it for many years. I might even ever draw on this in my life. I might just pass this to my kids, because there is advantages in passing a pension to your kids, tax-free and stuff like that in the UK. So I've got Alphabet, which is Google, very good company. I'm probably going to add to that. I've got Meta, which is Facebook, which is down. I bought that high at the wrong time, but when I say the wrong time, it's never the wrong time to buy Meta or Alphabet, in my opinion. This will come back. I'll add to this. I've got £5,000 in this one, and it's down 7%. I believe this is around about €700, £700 a share, is it? $700. Let's get it right. $700 a share. 713 at the moment. So I believe that'll go to $1,000 before we know it. Nike, I'm down 9%, but this is actually coming back. Nike. Yeah, again, I bought it too early. Hindsight's a wonderful thing, but it's a quality company, and I bought it cheap. I bought it in the 60s probably, or 70s, somewhere around there, 70s. Obviously, if I'm down, I bought it for more than that, more than 76. But yeah, it was 60 last week, or something, 60 odd last week. It's gone up tremendously, and I'm actually in profit on my other Nike position, on my other portfolio. But yeah, happy with that. SoFi, good company. It's solid. It's coming back nicely. I believe in SoFi very, very much so. Like I said, I owned a lot of SoFi just a week or so ago, and I've got out of it for now because I think it is a little overbought at the moment. But we've got a little bit of profit on it, and I'm holding that for a double up. And Nike, I'm holding Nike for a double up. I'm holding Meta for many years, Alphabet for many years. Stryker, another quality company. It's a good company, Stryker Corp. I'll hold that for many years as well. Stryker. It makes and designs medical equipment. Very good company. Look into that if you're interested in UK stocks. So there you go. Winning Resorts, the casino chain in Las Vegas, and I do believe they've got casinos in China, in Macau, and also I think they're making one in Dubai as we speak. They're building a big one there. Very good company. They've got a lot of quality land assets which are worth. Their assets are probably worth the same as the stock price, the same as the market cap. 104, it's a good price to buy. It's a good price to buy. Nice little good buying price. 104 was up to 140 not so long ago in 2021. It'll come back. It had a rough time with COVID. I think this is the dividend yield, 1% it's giving. It was about 5% before COVID. The dividend 5%. So there you go. That's me. Pension, not a lot, £17,000, which is why I'm not invested in dividend stocks and all that. I'm invested in growth because it's such a small amount. It doesn't really bother me. So there you go. If I had like 300,000 or 400,000, I wouldn't have that same sort of portfolio. I've also got a Trading 212 account. Let's have a look at that. Check that out. I've got the investment account here with £1,053 in, and it's just split between ARM, which you can't put in a British ISA, which is a individual savings account basically for stocks. You can't put it in a British ISA for some reason. ARM. I don't know why. I really don't know why, but I like the company. I think it's got room to grow, and I'm happy to hold ARM. Also, I've got Pershing Square, which is Bill Ackman's company. I've got £484 in there, up 5%. He mainly invests in food companies like Burger King, restaurants, things like that, Hilton chain hotels. He tends to buy good quality companies, holds them, and holds them long. I believe in him. I believe in Bill. In Bill we trust. So there you go. The stocks ISA. By the way, ARM makes and designs chips for semiconductor companies. It's a good company. Here I've got the most of me wealth here. I've got £86,358 in the ISA. Today's rate of return is we are down 0.1, but the rest of the time, 1 week I'm up 3,000. 1 month I'm up 14,600. 3 months I'm up 23,000. That's because we're coming back from a big dip. 1 year I'm up 18,000, and all time I'm up 18,300. It says 64% rate of return. Don't really understand that rate of return, how it works, how they've done the maths on that. But I'm up 18 grand, which is very nice. So the stocks I've got are Alibaba. Just bought back into China. This is my first stock I've bought back into China. Obviously, China's been a bit of a bad situation to invest in for the last few years. But now I believe it's okay to get back into China. So Alibaba, good quality company. I bought in, and we're doing all right. How's the FX rate? Has it got an FX rate on it? FX rate, I'm up on the FX rate, which is nice, because some of the other stocks last week, I was like 7% down, and I had like 70 grand invested, and I was 7% down when I rebalanced my portfolio. Luckily, like I say, SoFi came back, and I took my opportunity to escape out of SoFi because I had too big a position. You've got a position in size is everything. You can't be too heavy on one stock. It's too much. Going all in, and praying for the best. I got caught out. The stock market started plummeting. I thought, good opportunity to buy some more. So I bought some more. It plummeted even more. And then I went from like about 86,000 to like something like 66,000 or something. I lost a lot of money, and then just held on to it because I knew the company was good, and I knew it had come back. I just didn't know when. So there you go. Alphabet, yet again, 3 grand on there. Amazon, good company. You can't go wrong with Amazon. Can't go wrong with Alphabet, Google. Berkshire Hathaway, very happy to hold Berkshire Hathaway. That's the Berkshire Hathaway Class A share, which is 720,000 a share. I've just got 2,000's worth of it, which is like 0.00001 or something, you know, very, very small amount. But Berkshire, good place to park your money. Good place to park your money. So I'm happy with that. I'll keep adding to that. In fact, I'll keep adding to all of these. Each month, I'll add more to most of these stocks. There's very few which are just sitting in my portfolio waiting for a fat profit and then sell. Speculative stocks. But there is a few. BlackRock, they own the world, BlackRock. Investment management company. It's got over 10 trillion invested for on behalf of its clients. It's a massive beast, an absolute beast. It owns the world. Celsius, drinks company. It's got a lot of competition, and Monster will destroy anything that's small around it. At Monster Energy, they'll do anything to destroy companies, and they'll literally buy you out, copy your products. They'll do anything, and that's what they've done a bit to Celsius. But I believe Celsius has got a lot of runway to go. If you look at this graph here, it's come down a great deal from 100 to 46. It's half price. I've just bought in last week. I'm up 1%. It's happy days on this. This is a hold for a double up, realistically. Or at least to somewhere like 80. And then I'll probably dump it and get out of Celsius. Like, CME Group, got 2,000 with them. Basically a marketplace for derivatives and trading into out of options, trades metals. It basically does everything, this company. It also gives advice and stuff like that, and information to other companies, things like that. Good company, well worth looking into that one. Elf Beauty is another good company. It's done so well over the years, this company. Like, it's gone from like literally next to nothing here, $30, look, $10 there, around the $10 mark in April 2020. So in 5 years, it's 13x'd in 5 years, 6 years. Nice. It's got on a nice comeback. I've bought in, I'm holding, and I'm up 5-6%. It's okay. It's good. I'm happy with that. I'll hold that for a nice fat payday, and then I'll probably hold it some more, Elf, because I believe it's got years of runway. Halma is a British safety equipment company. They make and manufacture safety equipment for like harnesses, for scaffolders, things like that. Good company. It's a good company. Like, I've obviously bought in at the height, like, you know, bought in at the 1 year high, the maximum highs, all-time highs. I've bought in. I'm all right. I'm happy. I'll keep adding to that, and I'll hold it long. I'll probably hold that for as long as I hold Amazon and Google. Got a little dividend with it. PE ratio 41. It's okay. It's a little bit high, like, but it's okay. I'm all right with that. Nice company. I like that one. Intuitive Surgical. Another company that makes very complicated surgical equipment for doctors and hospitals and things like that. Good company. Solid company, like. And then here we have the graph. Look at that. A few ups and downs, like, but look, all the way up. Keeps going, keeps going. Very nice, very nice. No dividend. High PE. The PE is too high, really. So something to keep an eye on. But I'm fairly comfortable with this. I will keep an eye on that for certain. J&J, you can't beat a bit of J&J, a bit of the old baby oil, a bit of the old Diddy oil. Oh, he's just been sentenced. He's just been found guilty, hasn't he, on a couple of his charges. Old P Diddy. Looks like he's doing well though. He's not getting lifed off forever by the looks of it. It's a good, solid company, J&J. Buy it, hold it, never sell it. Pays a little dividend as well, 3.22%, reasonable. PE ratio's very nice as well. It's good, happy days. And I bought it at a reasonable price. I bought it at the same price you could buy it back in 2020. So, fantastic. I'm happy. I'll hold that and add to it. JP Morgan Chase, absolute beast of a bank. You're going to, in banks are something that you really shouldn't invest too much into in banks, I reckon. But JP Morgan, it's in a league of its own, like banking services. They hold 50% of the world's silver in COMEX vaults. COMEX, that's the word, COMEX vaults. So, good company. I believe silver's going to do well over the next few years, especially with solar panels and battery technology and computers, dentistry, jewellery. Silver's used in a lot of things. Silver's a very, very good metal to buy, especially over gold, I reckon. It's got a nice little dividend of 1.73%. PE ratio's nice. I'm happy, but it's at all-time highs. I mean, look at that, and that's where I bought in. So I'll be adding to that in the next few years, and hopefully the average doesn't kill me over the long term. I think we'll do all right with JP. Lockheed Martin, aerospace company, they make missiles basically to blow the world up. And seeing as Trump's on his way to blowing up anything he can and fighting with everybody, good company to invest in because they're going to be kept busy by Trump and his boys. So there you go. And I'm already up £13.59 on that within a week. So there you go, happy with that. London Stock Exchange, good company. They're thinking of moving to, they're going to move to the American stock market from the UK, I believe. I heard a whisper, they're going to, not move, they're going to also sell on the US stock market as well as the UK stock market. I think that's better put. Anybody buys a stock on the US, on the London Stock Exchange, sells the stock, I make money. So there you go, very good. Meta Platforms, Facebook, Instagram. This is a solid company like Meta. Like it's even run by. I know not many people like him, but the CEO is the original owner. So that's good as well for a big company like that. To have Zuckerberg on board still is nice. Very, very nice. I'll buy into that. I'll keep buying. I believe that's going to go to €1,000 pretty soon. It's around 712 at the moment. Microsoft, we all know about Microsoft. Nothing to discuss there apart from I'm down £3. I think he probably makes more than £3 every second. So there you go. But no, I'm down nearly £3.75. Now I'm down 30 pence. Come on, you can do it. Go into the green. No, it's down £3 again. That's life. Okay. MP Materials, rare earth mining company. Good company to invest into. I like it. I like that company. It's solid. Nike. I did invest into this last year and it went nowhere, so I pulled out. And now I've just invested last week, and there it is. That's when I invested about a week ago. I invested here, right there. And I don't know whether you can see the little dotted line, which is just there basically. But yeah, I'm up 23.6% in a week on Nike. And luckily I've invested a nice position size of nearly 3,000, or 2,200 I invested. I might add a few more shares to that, get it up to 100 over the next 6 months or so, build it up. Nvidia, it's a beast. It's just a beast that grows and grows and grows. I've took money out of Nvidia a few times, made nice profits off Nvidia, and now I'm back in again for the next run. So there you go. Pershing Square Holdings, Bill Ackman's company. Already talked about this on the pension. This one here, I've got 2,250 invested, 55 shares. It's good. I'm happy. It's solid. I'm going to hold that for years to come, and in Bill, I will trust. So there you go. RELX. It's a good company. It's another aerospace design, defence company. Good company, especially to hold at the moment with all the war problems. Rio Tinto, we all know Rio Tinto, big mining company. Nice company to put in your portfolio. It's based in the UK as well, like the headquarters. So definitely good to buy a bit of that. The dividend's fat as hell, 7%. Yeah, happy. If it carries on paying that dividend, very, very happy. Very, very happy. Robinhood Markets, it's another trading company like Trading 212. Robinhood is the American version of that, basically, of what we're looking at the moment. It's doing all right. It's a good company, solid. I don't know what it actually started at. Where did it start? $20, something like that. Where did it start? Oh, yeah. I don't know. It doesn't. Oh, yeah. Can't really tell. I think this is where it started, and actually around here somewhere, around $50 maybe. But look at that for a nice cup. I think they call it a cup. Is it cup and handle or something? It's on its way back. Look at that, flying back. So I'm up 15%. Bought in a week ago, and there it is. I bought in at 83. Now it's at 95. I'll keep adding to it. It's a good company. I think it's got a long road to run on that. Hang on a minute, I've messed up here. Did I say RELX? No, I did. Oh no, they basically help customers with big decision making. This company. Do apologise. It's RTX. Is the aerospace defence company. So there you go. Big aerospace and defence company is RTX Corp. Where have I bought into them? I'm up a little bit, 1.6%. Up, I bought in here. It's up to, bought in 143. Where's it going? Ah, yeah, bought in quite high, but it's all right. It's rolling up. Look at that, going up. That's what we want, straight off the page. Hold that for long term. Scottish Mortgage Investment Trust. It's got nothing to do with Scotland anymore. I think it did about 125 years ago when it was first, the company first set up in Scotland. But now it's got nothing to do with mortgages either. It's actually it's a closed-end mutual fund. It invests in growth stocks mainly. Does a lot, or it did a couple of years ago. It was invested in a lot of Chinese Alibaba type stocks, companies like Tencent and things like that. I don't know whether they've calmed down a little bit on that side of things, but it's one of those companies where you don't need to manage it yourself. It's got managers that are managing your money for you. That's what the whole idea of this investment closed-end mutual fund is, So I'll just add to that. And some of the returns in the past were fantastic, like absolutely fantastic, until a few years ago when it started to struggle when COVID hit and that. But yeah, nice company, Scottish Mortgage. What else have we got? Shopify. Shopify is good. It's a good company to buy, especially at these prices. I'm happy. $115, buy into Shopify. Hold that for a double up. That'll be held for a double up. So there you go. Shopify is like a online retail shop, bit like Amazon, similar to Amazon, but a lot smaller. Sirius Real Estate. That mainly invests in German and UK business parks and management of those business parks. But good company. I'm down 0.4%, but like I say, only owned it for a week, so just had a little bit of a bad week, On the whole, I believe this is going to start creeping up. I believe it's going to go, and the dividend's nice, sweet little dividend at 4.59%. So happy with that. I shall add to that over the years and hold on to that. SoFi, we've already talked about SoFi. I've got 9,300 in that. That's my biggest holding. I did have 6,500 plus shares on this one account last week and sold them off and just kept these ones. I've now got an average price of 15 on these ones. It's up to 18. It's a little bit overbought, but I believe this is going to $35 within by the end of next year. So that's why I'm holding that one and holding a nice chunk of cash in there. Bit of a gamble, bit of a risk, but that's what stock investing is all about. Is it gambling? No, not really. It's educated risk-taking, I believe. Starwood Property. I'm up £50 in a week. It's nice. It's a REIT. It's does mortgages and stuff like that. Good company, seems solid, and it's got a fat dividend, which is why I bought this one. The dividend's 9%, and it has no problem paying it. So that's why I bought that, and I'm hoping that it's going to start moving up a little bit. If it just moves up a little bit and pays 9% dividend, I'm well happy with that, aren't I? Supermicro Computers, a computer hardware company. It's a good, solid company. I'm happy. Whether I'll add to this much, I don't know, but it's. I think it's a good price at 49. It's dropped from highs of in February. Where's this? Is it about March or something? April. 114 in March, and so it's dropped massively in 1 year and 2 months. It's lost half its value, but I believe it's on a comeback, which is why I bought in. Happy days with that. And I've only got £2,000 on it, so it's not too bad when you've got a portfolio of over 100. I think I've got a total 104,500 or something at the moment on me Stocks ISA, me normal account, and me other pension account. So it's going all right and building up nicely. Tesla, what did I do? I don't know whether this can go up or down by 5% just on a tweet. Elon Musk tweets something, it can drop the price by 5%, and that's a lot. Especially when the market cap's $1 trillion. You know what I mean? That's ridiculous. You do one tweet and it drops 500 million? 500 million in it? No, 50 million. 50 million. No, 500 million in it. Drop 500 million. 5%. 5% of 1 trillion. Leave it in the comments. What is it? And while you're there, give us a like and give us a sub to this video. I've also got Wise, which is a money transfer company. If you want to send money from one country to another, you can use Wise. It's an up-and-coming company. Worth nearly 12 billion. Invested in it. I've got £1,000. I bought in. I've got a feeling it's going to go up. I think it's going to start moving. Over the last 3 months, it's going up. I'm happy. That's what you want to see. Last 3 months, is it going up? Buy. If you've got a stock that's just going down, 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 and you think, yeah, I'll buy it, it's going down, it's gone down so much, I'm going to buy, then it's not a good plan because you never know where the bottom is. We'll come back to Zim, but just look at Nike, for example. Nike stock here is at 76, but if we look at the max graph, look at that. It just fell from January 2022. It fell from 200, 180 or something, 170, 176. It's just fell. And just gone down and down and down and down. So dangerous, but Nike's a good quality company. It's the best in the business. It's literally the best in the business of the athletic brand shoes and that sort of thing. It's the best. So I've bought in. I'm taking a risk that this is the bottom. It mightn't be, but if it isn't, I'll probably sell it. I'll get out. If it starts dropping too much, I'll get out. Hopefully, it can go up a bit more, so I've got a bit more room to decide whether I've hit the bottom or I haven't. But I'm happy. It's gone up £500, 23% in a week since I bought. So hopefully that there will double up. If it doubles up, I'll probably get out of it. Probably. Does have a little dividend as well, which is nice, 2%. So that helps. And the last one on me list is Zim. Zimmer. Go the wheels on my bimmer. And that's what I'll be buying if Zimmer goes up from 16 to 1600. I don't think that's likely, is it? I think I got a little bit excited. It's not going anywhere. Like I say, look at this chart here. It's gone down and down and down and down. It's going nowhere. And now it's going nowhere from when? From roughly February 23. It's gone nowhere. So why have I bought it? Well, hang on a minute. What's that say there? 52% dividend. It's paying a 52% dividend. The thing is, it's paying it with no problems. It's not struggling, this company. This is an Israeli shipping company that deals in mainly container ships. Now the problems with the war with Israel is that the shipping companies having to take longer routes. So they need more ships. They're having to rent more ships, and they're then using those ships to transport the containers a different distance away from the war zone areas. And it's creating more business for them. So it's safe. It's going to do well. It's going to have a good year, which is why I've bought into this company. And hopefully I'll get the 50% dividend as well. On 1,300, as you can see, I haven't gone like 8,000, 9,000, 2,000, 8,000 or 3,000 on this. I've just gone for a small position size at £1,300. So even if I get a loss, it's not going to be such a big loss. So there you go. That's it. That's my full portfolio. People were asking for it, and there it is on the table, literally. So I think it's Red Label time. Red Label. Might have a Red Label, and then I'm going to go see how my boys are working. But thanks for joining me in Paradise, Nosy B, and I'll see you in the next one.